How does gold help you preserve your buying power over time? Today, I will show you the designer suit example. Let's dive in. Precious metals like gold and silver are often considered safe haven assets, helping investors mitigate the impact of market volatility. Precious metals are an inflation hedge. Gold and other metals are historically effective in protecting against inflation, as they retain intrinsic value. The designer suit example, gold versus US dollars. To give you an example, the cost of a designer suit, shoes, and tie would have been 1 ounce of gold, or about $20.67 in US dollars in the year 1930. You could get the same suit for an ounce of gold in 1980, but the cash price would cost you about $615 US dollars. Now go to the current year 2024. The 1 ounce of gold could still buy you the designer suit, shoes, and tie. But if you were to use US dollars to make the same purchase, it would cost you about $2,700. Now here is the incredible part. While the 1 ounce of gold has preserved the buying power to be able to buy the same suit and accessories in the 1930s up to the present day, the US dollars have declined so much it would take 8,366% more dollars to match the 1 ounce of gold purchasing power. In terms of overall buying power, the dollars have lost a significant 98.82% of their purchasing power between 1930 and 2024. It only makes sense to diversify and protect your assets with physical gold or a gold IRA account. Get more information now from one of our top providers, GoldenCrest Metals, by going to the link below the video or goldencrest.info now to request a free gold guide. They are also running a limited time promotion. Get up to $25,000 in free silver with qualified purchase. Don't miss out. Go to goldencrest.info for amazing info on this promotion now. Thanks for watching.